a lot of these barriers are broken down because of things like Bitcoin and other decentralized networks. And the introduction of central bank digital currencies is only going to amplify people's realization how a controlled centralized system really doesn't work long term, and that it's this way of opting out of that system, providing a financial system that you can exist where you control as an individual your sovereignty around your assets, your money. The power of that independence is incredible in our world today. Hi, Sam Volkering here for Southbank Insider for another week. So today I want to talk to you about the crypto markets again. Um, I've had a bit of feedback that I've talked a little bit about my view on the direction that the market's heading, but I haven't really shown you so much. So the boffins at Southbank Research that be have helped me to share my screen with you through the software that we're using now. So I'm going to do that. I want to show you specifically what I'm looking at when I'm talking about the crypto markets, heading back to talking about the crypto markets having a very similar patterns to what I've seen in previous cycles. So without further ado, let's get this screen sharing business going, and then we can actually start to take a little bit more of a closer look around what that exactly looks like. So just wait for that to pop up, which hopefully shouldn't take too long. And then what I want to do is I'm going to pull up the Bitcoin chart. Okay, so if we have a look here at Bitcoin's chart, I'm going to bring that up so I can see that a little bit higher. Okay, so what we're seeing now over the last 180 days, this period here, this sort of November into December into the start of the year, it's a I don't. There's like so many terms and terminologies for different shapes and patterns you can get out of charts, and you can call it what you want. But it's remarkably similar to what we've seen previously, and I'll show you what I mean. So if I expand out my chart a little bit further, go right back to 19, 20, 22. So there's really sort of two phases. There's around here, around 2018, 2019, if I highlight that section there up to the start of 2020, this period through here, see how Bitcoin bottomed out about December 2018? So that's a similar pattern to what I think we're seeing right now, is that we've this sort of November, December last year, 2022, was the low point in the market. And I say that because a lot of negative news continues to come out about regulation, central bank digital currencies, which is enough to kind of previously have put investors off the market. And we've seen that the crypto cycles do move on news flow quite a lot. You know, you look at the debacles, the Terra collapse, the FTX collapse, that all had massive downward pressure on the crypto markets. But then it found its bottom, and I think that's a similar pattern to what we've seen here. So what I'm expecting is that for the next couple of months, things will more or less trade sideways. But I think what we'll very quickly see is probably say around sort of July, is that we'll get that ratchet up, and then towards the end of the year, that's when things are going to start to really hit their strides. Now, the actual part which I really think that this is all similar to is actually into the earliest cycle from 2016 to 2017, 2018. So if I readjust my chart, so if we look at about here, I think we're in a period where sort of we're about January, February 2017. So if I again highlight, I've gone and clicked the wrong button, but if I highlight where we are here, So I'm going to overlay that in a minute with this current year. But around November, December 2016, price took a little kick higher and then came right back, knocking off about 20-30%. But then it's this gradual move towards the middle of the year. Now, at first glance, you'd be like, wow, that's an astronomical chart. We've gone from 500-600 to 3,000. That's just the first half of 2027. What most people recognize 2017, 2018 for is the period from October to January, sorry. So that's when Bitcoin was about 4.5 grand and went to 20 grand. But it's this first half of the year where things really started to gather momentum, which set us up for that second part of the year. And that's what I'm looking for in this first half of 2023, is that right now we'll probably see Bitcoin trade sideways-ish, but just slowly but surely, without shooting the lights out, head a little bit higher. Like what we saw, as you can see, if you look at the numbers sort of April, May, just talking about $100, so about 10% here or there, sort of every other week. And then it starts to really get some momentum into the middle of the year. Now, what if we see that happen again, and then sort of June, July, it goes back to that sort of 40, 50K mark, then there's a good chance that we'll see a pullback, and that towards October, it may come right back down to about, 30, 40 grand even, right? But my view is that as we head towards the end of this year, is that we're going to start to breach the previous all-time highs. So if you look at this 2017-18 chart, the previous all-time high was, I think, 1,200 something. And then, so this was a new all-time high set in December, January 2017, 2018. The actual high came in 2018. I think the chart doesn't necessarily accurately reflect that. Then there was the massive tail off. So that was really you'd call that maybe the third crypto winter. And it was this period here, December 2018, where the market found its bottom again, traded sideways for a number of months, started getting going again. But it was, while this might look like it's I guess, second coming towards going back to those all-time highs, it was kind of a false flag. And we do get that in multiple cycles, is that the market starts to come back towards those. Sorry, I can't expand that chart back up further. The market looks like it's heading back to those previous all-time highs, bottoms out, and then it pulls right back and then trades sideways. The March 2020 low, I should add, is a massive anomaly, and that's because of all the COVID situation. If you kind of cut out this period here between sort of, say, mid-February 2020 to mid-May 2020, just pretend that doesn't exist. I think that probably leads a few people into a false sense of security. But realistically, from sort of July 2019 right through to October 2020, the market more or less traded sideways. So that's really a whole year of it trading sideways. And that's I think that this cycle is going to be similar. I don't think it'll be quite as long, but more or less the market is going to trade sideways for, I would think, the next 3 to 4 months at least, with just slight incremental moves higher. But then it's that October. I think October is the time of this new cycle where things are going to take that next leg up. Now, I've been wrong before on the market in terms of calling when it bottoms and when it peaks. We have been around about pretty close a couple of times before. But the key point is that you can look at this cycle from 2020 to 2021. I'm just going to highlight each of these cycles right now. So 2020 to 2021, right? That is a crazy chart. And some people think that we'll never get back to that it was a one-off boom and bust cycle. But then you sort of scroll that back to the 2016, 2017. And the chart's even crazier when you look at those sorts of numbers. And people thought at the end of the 2017 boom and bust, so if I highlight just over the boom and bust, people thought that we'd never get back to there again, back to 20,000 again. And we did. And if you actually go all the way back to the 2013, look at the 2013 boom and bust. So the point being is that when you actually look through these cycles, we get boom, bust. We get boom, bust. We get, surprise, surprise, boom, bust. So that's three obvious cycles. As I said, realistically, there's 1, 2, 3, 4. We've had 4 cycles now. And every single time we get to the boom and the bust, and people say it will never happen again. And it does. Now, you can never, as you're well aware, you can never guarantee that these are going to happen again and again and again. But we're now on the 4th cycle, or actually probably if we have another cycle, that will be the 5th. It's hard to ignore those previous trends. And every single time when you look through, if you go right back to the start and just look at the whole chart, all you ever see is the latest boom and bust, because it always comes back to the previous all-time highs and beyond. That's that first boom and bust down there. That's the second one. And there's the third one here. It's not showing the 2010, 2011 boom and bust either. But anyway, the chart doesn't go back that far, so it doesn't really matter. If it heads the direction that I think it's going to head, then these previous highs up around 60,000 will look in the next cycle like the previous highs from the 2017 boom and bust. And so on and so on and so on. So the long-term view on, and if we focus just on Bitcoin at this point in particular, and I think that Bitcoin, and I've written about this previously, I think Bitcoin provides an exceptional hedge against uncertainty. There's a narrative out there that says Bitcoin is a great hedge against inflation. It's never really been about inflation. It's always been about uncertainty. Bitcoin and cryptocurrency is at its sort of most core value, the antithesis of a centralized, controlled financial system. And so when you hedge against the uncertainty of that system and you have an alternative, that's where the value really comes to light with what Bitcoin provides. Is it provides the opt-out from a system that doesn't work as well as it should for a whole range of different things, whether it be remittance and payments or inclusion. I've said this before and will continue to say it time and time again. If you've ever moved country, which I now have done a couple of times, it is incredibly difficult, even just to set up a bank account. Cryptocurrency in a decentralized system breaks down a lot of those barriers. If you've ever tried to even just set up a stock trading account, it's really difficult. And even when you do set up a stock trading account, you're at the control and mercy of third parties, custodians, brokers as to whether or not you can even enter that market. A lot of these barriers are broken down because of things like Bitcoin and other decentralized networks. And the introduction of central bank digital currencies is only going to amplify people's realization how a controlled centralized system really doesn't work long term, and that it's this way of opting out of that system, providing a financial system that you can exist where you control as an individual your sovereignty around your assets, your money. The power of that independence is incredible in our world today. And so I think that people sort of really need to understand that it's not, while it is, we look at price and we look at these cycles, the price is reflective of the growth in power and the strength of an alternative financial system. If you're like me, if you're really thinking about the long-term nature of cryptocurrencies, you actually don't really care about the fiat value of Bitcoin. It's not about the fiat value at all. It's about having a significant chunk of an asset or money in an alternative financial system so that you can function and operate in that financial system long term, forever, and not have to go back to fiat centralized control money. If you can opt out of that system and then live outside of that system, you know, then that's an incredibly powerful thing. So again, I just want to reinforce is that when you look, if you're looking at crypto and Bitcoin in particular, and you're looking at the values of it, we use value, we use fiat currency value as a yardstick as to the health sometimes of a network, and it can be useful in that sense. And if we're doing that, then I believe we're going to move forward with more cycles, that we will find another one that will continue to push the fiat currency value of Bitcoin to new all-time highs, which again will be a reflection of the uncertainty in the traditional financial system and the growth and strength of Bitcoin and of other cryptocurrency networks. And there will probably be a boom and bust cycle of this next one. And then there will probably be a sixth cycle and quite possibly a seventh. And we may see multiple cycles in fiat currency. And that's, again, not necessarily a reflection of the volatility or the volatile nature of Bitcoin or cryptocurrency. It's more a reflection of the volatile nature of the traditional financial system and the uncertainty of that system and the money printing and the poor monetary and fiscal policies, a whole range of different issues with the traditional financial system. That is a byproduct of the volatility in fiat currency price of something like Bitcoin. So bear that in mind when you ask, why is it volatile? It's only volatile because the system that it is the antithesis of is volatile by nature itself. So anyway, that's all this week for my Insider, Southbank Insider. I'll be back again next week. I have promised some guests, but I've been flat chatting. I've been poorly organized in arranging guests for my Wednesday weekly update here. But I will try and get some more guests on soon. But happy to do some more screen sharing, showing some charts and things like that to help maybe explain some of the views that I've got in not just the crypto market, but the wider traditional market. Anyway, thanks for tuning in, watching, paying attention this week. I'll be back with you again next week. Bye for now.